Hey folks, and welcome to the Pipnotic Symposium for the 11th of August 2018. Today we are going to talk about a few things. First of all, I'm going to run through some of those levels that we looked at one of the previous symposiums, and I'm going to run through some of the other software that we have at Pipnotic. I know most people are using the supply and demand as their primary tool. Others are using currency strength, but we also have some others which are pretty useful. And I'm going to run through these just to make you all aware of what else there is in our arsenal of goodies. And then we're going to have a look at some more levels, I think. No, actually we're not. We're going to look at setup. So we're going to find we'll look at live markets, find some charts that are setting up nicely. We're going to look at entries, take profits, and stop losses, because this can be very tricky to identify, and this was a request by Pippa in the chat room, so we'll have a look at those. Okay, first of all, we're going to have a look at some of those levels. We talked about, we're looking at the dollar yen. I'm just doing this because on this template I have the one time frame. This is the one I was using when I did the last one. I think it was a couple of symposiums ago, and the lines are still on here, so I thought we'd just go through these super quickly. But we're looking at areas of supply and demand that might be interesting on the dollar yen. And we have this one up here, which is beautiful. We have this one here, which is okay. We have kind of the parent, the child, this one here, which tested it, and the release happened from there. We have this one here, and then price entered. We go up to the 4-hour chart. We entered this big daily area, which had been tested once before, and so we're expecting price to kind of have a bit of a reaction down here. What we were looking at was this one here, how price left quickly, and then we drill down to the very small time frames. So we're going to go back to the small time frames. I'm just going to have a look and see what that is. I think this is the 1 minute time frame, and so we could see that, I mean, price poked into this daily area. We went higher. We retested roughly the area. We came back. We had a pullback, and then price released very nicely. And we saw this as being an area that looked interesting to us. This is a 15-minute area of demand. Let's have a look here. So we saw this as being an okay area. We have, mediocre area. We have this area just here, which is kind of a pullback into this 4-hour area. This becomes the child. The child was tested. And then we're looking at this little wick here, and I said that we should go down to the smaller time frames, and we went all the way down to the 1 minute, and we'll do that very quickly in order to find this little one here. You can see that it looks like this. So very nice pullback, accumulation for 1 minute, and then price left. So this is a really nice area to start accumulating long positions on the shorter time frame. This is the 1 minute chart, so this stuff does not go on. We don't set daily trends, not necessarily. So we talked about that, and price did come back to that area. There was some news out of I think it was the US, and price poked back into that area, and this is where we saw a nice release. So this is really a really nice reaction. We went through it, and then price found the liquidity that was needed to hold price. We'll go back and see where that went, and that was here, just at the top here. So price kind of pushed higher. We popped up, we tested. This is kind of pointing to the edge of the buy zone. Then price went up, and this is where price kind of left from. So a super interesting little push there. And of course, I think, as far as I remember, we started on the weekly chart and went down from there. And so, I mean, a lot of people are super keen on trading short term because then there's going to be more action. But yes, and that's fine. And if you gravitate towards the smaller time frames and you like more action, then the small time frames are certainly going to give you this. But I did this. We had an entry on the 1 minute chart, but at the same time we started our analysis on the weekly chart. And so you have to be mindful of what's going on in these bigger time frames in order for these trades to work out, which is what we did. Okay, good. Let's go to the Euro US. Sorry, before we do that, let's go back up here. I just want to have a look at the levels, the areas of supply that we had above price. So we had marked this one off, so price came down, we accumulated and we left, and price had not been back. I mean, it had been back here to this level, this test here. So price came close to it, we accumulated, then we popped through it, and price went to the high of this area here, we had some divergence at the area looking like that, and then price broke away from there. So this is just a really good example of how price plays throughout these areas. So price came up and moved through it. We started accumulating orders to go short. Breakout traders would have been caught with their trousers down. Price went up, but this does not mean that price is going high. It means that price is looking for liquidity to drive price lower. Why do we know this? Because we are reacting at an area of supply. So we had that divergence going on, which is also a clue. So the histogram would have been going down, price was going higher, and then price moved away from there. But we still haven't reached this one up here, which is okay, and this is a good level, a nice level up here. Good. So we had we had the demand at the bottom and supply at the top. Good. Let's go to the euro US dollar. We had this area marked off. This is an hourly area. We have a look. Kind of a funny hourly area. Let's have a look at the 4 hour again. Yeah, an hourly area marked off, and this is because we had, this is probably maybe a daily level. Yes, because we had a horizontal trend line like this, and so we had respect for an area here. So we had something in here, some demand in here, micro demand, because we have to go to let's go to the hourly chart to have a look at it. Scrolling. Okay, here it is. So from here to here, this is the one. Price tested it, and now it's gone. What does that mean? Well, that means we have to find the area of supply that took out this demand, and it was this one here, which is why we marked off this one. Okay, and if you go to the daily chart, it becomes very clear, because you can see that we had accumulation just above that area, and price has not been back. So this one here, this is gone, and this one is still valid, like so. This one is actually, change the line like that. Okay, so this one is the one that's still to be tested. This is a really nice area. I like that, because this is the one that kind of took out this micro demand that caused market structure to fail. So this is an interesting area for us. Not a terribly nice release, but technically speaking, due to the rules of the consumption of opposing supply and demand, this would be an area that we could consider. And price went all the way down here to this white box, which we marked off, and it looks like magic, doesn't it? How price comes down to the areas, just pokes through them and then goes in the opposite direction, but it's not really, because we're doing the exact same thing. And if we zoom out a little bit, you can see how this one, price came down to the area, so it's telling us that we don't want to be paying a price any cheaper, any more expensive than the low of this pullback. Okay. The spreads probably, so you might want to put the entry just a little bit above, and price came down to this area, and this is where we had a pretty nice bounce. So we had a super small risk, a 35 pip risk, and price went up. And we had more than that. We needed the stop as well. So 2 times this, the size of this, just keeps out of trouble, and price went north very nicely. So we had a pretty nice bounce there, and it's pretty interesting to see how this area has held still, and then price finally broke through it. So now the magic question is, what do you do? Well, now you find the area of supply that took out this demand, which was important because it was tested once. You mark this off. Once, twice, 3 times, 4 times, blah, blah, blah. Now it's gone. Where is it? It's here. So this is the one that is interesting to us. Like this. Like that. So this is one that's interesting to us. So we expect price to do something once it comes back up here. And if we're more accurate, we would do something like this. We'd just take this pin bar like that. If you wanted to get meticulous, go to the half-an-hour chart, then have a look and see exactly what's going on. And here you can see that we have, when price moved away, you can see pretty clearly that we have the lows here. Okay, test, demand, test, what area of supply did it? or something in here. But this is not a terribly nice one, so what I would probably do is mark off this, like from the high here, or to the close, like that, and up to the high. And the stop would obviously be higher, but we'll mark it off like that. So this is what I'll be looking at here. Go back to the daily chart, have a look. And then you can see it brings us slightly up into that accumulation candle. Good. Okay, enough about those. Let's have a look at some of the other software now that we have, because a lot of you already know that we do have quite a bit. We have the supply and demand, which is here. There's quite a lot. It's in the kind of the meat of the Pipnotic offerings. And we have currency strength. We're not going to go into details about these because I think everyone knows about these. We have the histogram, the GFX, we have the dashboard. I don't know what's in there. And then we also have this one, which is a really, really cool tool. And this is the intra candles. And I'm going to delete all of these and I'm going to put this on. And it's default behavior, and then we're going to have a look at what this does. And this tool is amazing. I absolutely love this tool for very good reason, because what it's doing, it's showing me, it looks a little bit cluttered potentially, but I want you to realize that it's showing, we're on the 4-hour chart, but note that we can also see weekly candles on this 4-hour chart, and this is really, really interesting to us. Because this enables us to, similar to the supply and demand software, which is overlaying greater period areas of supply and demand on the chart, this is doing the same thing, but it's showing us candles. And the cool thing about this is you can see that some of them are color coded, similar to the candles we have in our supply and demand software. We have the white candles, which are the accumulation candles. So these are telling us that we have order accumulation going on to push price either higher or lower. And we also have these lime green candles, which are the price imbalance candles. So the imbalances in price typically occur at the origin of the candle that is color-coded green at the top. And the accumulation candle is color-coded white at the top, as you can see here. And we have bearish candles, which are red at the bottom, and bullish candles that are blue at the bottom. And all of these are configurable in the settings here. And these are the exact same colors that we have from the supply and demand software. So all of these settings have been copied. So we have purple for the monthly, orange for the weekly, daily, 4-hour, 1 hour, and so on and so forth. So if you're used to the supply and demand software, the learning curve for this should not be difficult at all, unless you've changed all the colors in supply and demand software. Okay, let's have a look at this and see what's going on. So how is this? How can we use this piece of software here? Well, obviously, we want to trade on the daily chart. Let's make it simple. Let's put 2 here, so we're looking at time frames 2 times greater than the one we're currently looking at. Okay, so we go like this. We go on the 1 hour chart, and we are looking at daily candles, because daily candles are, let me move this down, 1 time frame, 2 time frames greater than the hourly chart. Okay, let's move that back up. So this is interesting because it's showing us some pretty remarkable things. You can see here, I'm going to zoom out a little, that we have a lot of respect for an area here, and I'm going to take the closes here. We kind of do an average of the closes and opens that are around this area. We're probably around here, I'd say. Okay, you can see that we've had kind of prices rejected from here and here, close, went through it, didn't close below it, tested it. Then you ask yourself, well, where is this candle or this area of supply that caused market structure to fail? Where's the origin of this move? And you can see that the origin of this move is just here. And so that would enable us to take this information and consider this for selling opportunity should price come down. The interesting thing here is that you'd be selling at the close of the previous day, which is a powerful price level, and also you can see that we have a lot of price going on there as well. So we see that we have a very clear drop and release from this area that took out this area just here. So if we consider this just here, you ask, so the question, what area took it out? This one did, this one up here. So you would look at something like this, maybe something like that. So price came down, tested, and then left. So this is the beginning of the sell zone. Then you can start selling as far as you like, and it'll probably potentially come up to here. So it'll probably poke through this area before it finds liquidity required to pull price lower. So you can use it for this as well. It's just, I'm a pretty visual person, so I like to make a lot of different, I like to visualize price in a lot of different ways, which is why I've made this indicator as well. We have a look at another pair. We just looked at that one. Let's look at the dollar CAD just for fun and have a look. You can see here that we go to the daily chart so we can see weekly candles. Yeah, we have a weekly accumulation candle here, which means that price will probably start reacting here. We'll start to attract some selling once we enter this here. And if you look carefully, you'll notice that we have price has already returned back to here. So this is the beginning of the sell zone, which is slightly into this accumulation candle. Okay, this is nice. Price went down, we came up, we have a lower high and a lower low. So obviously we want to be selling because we have supply being respected and demand is being consumed by it. So this is the beginning of the sell zone. If you look here, you can see actually that we have a pretty nice something in here that looks pretty interesting that we could consider sell at, kind of somewhere up in here. This is kind of like a pretty nice area to begin to start selling once price comes down, comes up to this area here. And so you can see again, this is happening at the close of the previous month. We had some accumulation for several days. Price was looking for liquidity, went a little bit deeper, and it found it here, and then it dumped. So this is obviously the price level from which price released, and so this is where you want to start selling. We have a similar thing going on here. This is probably on a weekly chart. Let's go down to the 4-hour candle and have a look. So we can find it. So here is the other one that we saw, which started to release here. So if we look, if this had any, if we saw any reactions here, we did here. So price kind of poked up into the area. We moved well into that accumulation candle. We'll mark the high of it off here. This is reaction. This is the beginning of that accumulation candle. Looks like price probably went through it. Let's go back and have a look. Yeah, so this is the high of it. So this is the accumulation candle, and price went beyond the wick, and it went to this area here, which is a natural place for price reacts with the lows here. This is also telling us that we have something similar to a parent-child relationship, where we have this period of accumulation. Oops. This is kind of like the big high. Then price moved down, accumulated for 3 weeks, and then left, accumulated and left. You can see how price kind of tested, kind of moved up. You see how it moved up. This is almost telling us that this is kind of the child and this is a parent. What does that mean? Well, that means if you know this, that you want to be focusing on the child, which would bring our attention to this. Let's go down like this. This being the edge of the beginning of the sell zone. And so stops would of course be put above here, or potentially above this area here. And so this is of course a very interesting piece of information, because you can see that, yeah, well, we have here, we can see that we have 3 weeks of accumulation. Why? White candles. Here we have the price imbalance candle here, so price released. This tells us that we had a lot of pushing, a lot of volume driving price lower. And we had a test in the area telling us where the edge of the area of supply is, and then price came down and started painting green candles all the way down. So price had a couple of tests. Let's see where these tests were. Yeah, so we had a test into this, which is kind of roughly the area where we had this, because this looks similar to an accumulation candle. Price came down, we moved sideways for a while, and then we had another price imbalance, a release. So a push, accumulation, a push. So this is where we saw the first reaction. And then price moved through it. We're looking for deeper liquidity. Let's see where that is. Oops. Let's see where that is. And that is kind of at the lows of this. You can see here. And price moved through it and went deeper up into the area. And this is where the beginning of the sell zone started, according to what we can see here on the weekly chart. So drop off at the apex, the high of the entire area, accumulation, accumulation, accumulation. This is a lot of building of orders here. We have 3 weeks of sideways price movement. So this is the market loading the gun to do what? To move price lower. And once you see this, then you know that you should be selling once price comes up to the parent area. Okay. Yeah. Good. So I mean, just again, another way to visualize price. If you like it, use it. If you don't use it. It's just a pretty simple tool. I sometimes, when I'm scanning pairs, I'll be on the daily chart or the 4-hour chart like this, and I just drag pairs over and have a look. Maybe here makes a little bit more sense and just drag pairs over and have a look. But I don't use it so much anymore. I used to use it a lot. I used to use it for stuff like this, saying like nice place to sell. It's kind of like do stuff like this, But I don't use it so much anymore. But I used to use it a lot, which is why I developed a tool to show this information. But it's super useful, and if you find it useful, then you should certainly have a look at it, because I think you'll see value in it. Okay, good. Let's move back to the normal template, which is a default, which is my go-to tool. And let's have a look at what we can, how we can identify entries, stops, and targets, because this is a very, very important part of trading. Obviously a lot of people can find entries, but then they find themselves getting stopped out, or they find that they get out early and the price keeps going on, or they find that they had what they seem to be a realistic target and price only went a fraction of the way towards it before it turned around. So it's important that you know what to look for. Okay, just by the way, look at this. We have the daily area, and within that we had a nested hourly area. Look where price came to. It came right to it, then had a bounce. So amazing, good. Okay, so I'm going to simplify data representation by putting 0, so we're only seeing the current time frames areas, like so. Okay, so what we want to do before we do anything else, we want to see what direction price is going. Is price moving higher or lower? Okay, and so you want to see, you don't want to focus on here, you want to focus on the most recent bleeding edge price. So it's at the right side of the screen. This is the most important. You don't want to focus so much on this, because sentiment was bullish here, and now sentiment is bearish. Okay, so you have to focus on here. A lot can happen between here and here, so it doesn't make sense putting more weight on here than it does here. I want to be selling the Australian dollar, American dollar here, okay, because this is what price is telling me to do. So you want to focus on that. You can see here that price is moving lower on the daily chart. And this is, of course, a time. This is context specific. If we go to the weekly chart, might be telling us something else. Yeah, in the weekly chart, we're range bound between this and this here, this area of demand just below. Okay, so that means buying down here and selling up here, and not messing around in the middle. On the weekly, it could be telling us something entirely different. On the weekly chart, let's zoom in a little bit, we're kind of range bound as well, where we have this here, and we have something here. Here, so we're reacting between this parent, which is probably a daily or a weekly area, and this one here. You could even, now this is the one, this is the deepest one. You got that. So price is probably attract some buying once it comes down to here, and selling once the price comes up here. But keep in mind, when price is moving down like that, you don't want to be buying down here. I wouldn't be buying. I would be certainly looking to, this is really important, when price is going down like that, you don't want to be focusing on the leg that is moving, that is currently showing this direction of price in order to buy. Okay, counter trend. You don't want to be buying on demand in this leg here. You only want to be buying in the demand that is over here, which brings your attention here and also lower. This is not a good place to buy. Why? Because flows are clearly moving lower, so we probably will move through this and start to find something in here, probably in here. Okay, so you have to be super careful about buying, buying here, bad idea, and buying here. Okay, it's a really bad idea. So you have to know that these areas are not your friend. These are not demand. Why are they not demand? Because they haven't done anything. This is demand because it's taken out this supply here. Okay, so just to do it super quick, we had this. Tested. This is now gone. What area did it? This one here did it. This is gone. The origin of the move that took this out is where? Is down here. Keep in mind that we have the origin, so we have these areas up here. These are the ones that are actually responsible, but the origin, so like the origin of this entire move is down here. So this is where we're going to see reactions, but you can also see reactions down here. Here we have one. Here we have one here, like so. So like that. Okay, so we had a little bounce here. This one got completely cut out. The cool thing about this one is, this one's gone. But if you look at this, and you look at this now, and you can say, okay, is this a parent or a child? We have accumulation here. Price dipped into this accumulation. What does that tell us? That tells us we have a parent. So we have a parent, child. So this was not demand, was it? This was a test. Price came down to it. We stopped on it. We accumulated. You can see as we saw here, and then we cut through it. Price tested the area of supply that removed this area of demand, and this is where we saw the reaction, and price went through it. Okay, so these are gone. This one here is gone. What area did it? This one here. You think this one here, but is this a child or a parent? This is the one we want to do. And we have a big wick here. What does that mean? That means smaller time frame. Small time frame will do what? It'll bring your entry higher up into the wick. Okay, we'll just leave it like that for now. Good. So this is not demand, so don't take it there. Good. Okay, so we are bearish on the monthly chart. On the weekly chart, we are consolidating. You can also do this by using trend lines. So we have a high. So if we just do like the major swings like that, we are still in a bearish. We're still sellers. We're still bearish, but we're having a bit of a breather from this very strong bearish move. Okay, because we broke this trend line, we cause market structure to fail. Okay, remove this. Good. So we are selling. Go to the weekly chart. We have a look. We're still selling. You can see that we have price that's wriggling low. We've taken this out here. This went higher than this. This is important. So we have to keep this in mind. We have this area of demand which has been tested once. We're accumulating just above it. That makes me feel a little bit careful about buying down here, because it looks like we're selling to do what? Potentially move lower. So be super careful about buying the Aussie dollar, American dollar now and expecting it to go on for days or weeks, because it probably won't. Okay, so we're moving lower. We have our trend line. We're moving down like this. Go to the daily chart. You see here we can connect this up nicely. Oops, like this. We can connect this one to this one. So moving down, this is a nice little area, kind of price left. But what didn't it do? It didn't really move away from here strongly. So this is not one I'd have been interested in. I like this one. I prefer this one much more because in price really moved away from here. We took out these lows. So price now is kind of moving sideways. But notice now that we did have this market structure in place, which is now gone. So now we go to the 4-hour chart and find out what area of supply caused market structure to fail. And you can see that here. So on the daily chart, this is this was below the closes. There were no closes beyond this point here. You can see here, just tests, which was price coming into here. Remove this trend line. Test, and now it's almost gone. So now we go to the smaller time frames, move down, and you say, okay, what area did that? You can see that what are we doing? We're accumulating. Accumulating what? We don't know yet. And the good thing is you don't have to know. You don't have to know what's going to happen next in order to earn money. You only have to know that the market is preparing to do something. So for the time being, don't do anything. Wait for this to show you if it's bullish or bearish order accumulation. And we don't know that yet. We know that price has fed deeply into this daily area of demand. Excuse me. And it's accumulating. That would make me feel a little bit careful about doing anything. I certainly wouldn't want to be buying now because price managed to close really deeply into this area and accumulate. So my gut feeling is telling me that price is going to go lower. And so now price will maybe accumulate for a little while and then cut through, or accumulate and then move higher to find sellers to drive price lower and through this area of daily demand. So you can see there's something going on. So we go to the smaller time frame, go to the 1-hour chart. You can see that price is doing his little dance, and then we have this over here. So this is like an area of not a very interesting 1-hour, a little bit messy, but we do have something going on here. Okay, at this area here, the 73.67. So this is potentially a price sensitive area. But before we can assess if it is supply, we need to do our homework. So we have to find the areas that are responsible for doing a dance. And so we have to find valid supply and valid demand before we can do anything. So we go hunting. We look for this. This is supply. Why? Well, what made me think that this was supply was because price left, we tested, and then we really tanked. So we moved down quite low there, and we had this low here, which is now gone. The area of supply that took it out is this one here. So supply tested. The beginning of this buy sell zone is starting here, and it goes up and above this. Price came up to it. We accumulated orders to do what? To move price lower in this supply. So this is supply. This is simply the market filling orders. So this is very, very normal behavior. Price will move up into an area. This is a marketplace. This is an auction. So this is an auction space. We have sellers moving up in here. We have buyers moving up in here. So this is an auction. This is auctioning going on. So now people, okay, we have this for this price, buying, selling. Yes, I'll sell. Great, I'll buy. People are buying and selling here. Price leaves. We have that nice green candle away. Price moves up. We have an attack at the supply here, and this is where price drops. We even have a small gap move away. So we have also some people thinking like, oh, we didn't get in on this move here, so I'll leave all orders in here. This is a window of opportunity. Price pokes up into the air once more, and we have a really nice sharp release. And then price goes down. We have this here, which is not demand. This is just a reaction to demand. This is probably going to be micro demand. You can see there's a little wick in here, so there's so we have something in here. I'll just mark it up, really tiny one. Price came down, tested it, telling us where the area of the buy zone is, the edge of the buy zone is. We came down close to it, and now that micro, probably 30-minute, yeah, 30-minute demand is located. It's right there. Okay, that's where it is. And now what is it? It's gone. So what area of supply did that? Let's go to the small time frames. Still hunting. We're hunting for details, for accuracy. You can see here we had a really nice push through. This like cut through it. Boom. Okay, we're going to go to the 5-minute chart. Have a look even closer. So this here is interesting. We had a nice little area here. Right there. This one took this one out, so this one is gone. And this one is still there. I'm just going to remove the indicator, so I have to do it myself. Okay, so we have this one here. This is where price cut away. So if price manages to move through, that would be great, especially if it doesn't come up here before that. If price comes up here, it may or may not stop. It may continue wriggling higher to find the necessary sellers to drive price lower. So we have this one, which is nice, a really nice push away. And so now let's have a closer look at this to see what's going on inside that little 5-minute area. Okay, so now we have this, what appeared to be a nice area, and it is, but notice that this is actually not supply. This is a reaction to supply. So the supply is here. We have the accumulation candle here, something else up here. Price has already been back to here, so do not, rather start to sell once price gets up to here and above. It's a super small area because we're on the minute chart. It's probably a couple of pips. Okay, 17 pips. Yeah, that's it's a pretty big area. We have something like that. So this is the edge of the sell zone for this. And if price manages to move through that, that'd be really, really nice. We'll leave this on there, and we'll have a look at it next time and see what happens. Okay, let's go to the hourly chart and have a look at like potential stops and targets and so forth. Okay, for this one here, I mean, this is a really small area, and so for a stop on this, I mean, you're going to have to be really careful, because when you have stops that are this small, it's tough because you can get spreaded out overnight. You can do, yeah, I mean, a lot of things can happen. Volatility could go up, liquidity could go down. This increases the spread significantly. So if you have a 9 or a 10 or a 12 pip stop, you can easily get stopped out because the spread widens. So you have to be really, really careful with putting stops on these tiny little positions. I really don't recommend doing it, or I recommend just putting the stop in having emergency stop much higher, because this is a tiny one. So that said, I would probably put a stop somewhere up here. Let's have a look. I mean, there's absolutely no supply up here. There's no supply until we get kind of around here. Now we have some resistance here, which is good for us. So price could likely come up here and maybe even go as high as this little area of support or resistance here. That's something that could certainly happen. But it could even move as high up to here, which is where we have kind of the thicket, the volume of trading which has occurred at this level. So, I mean, this is just a really trigger, and I would never take this trade because it's simply too small for me. But I would look somewhere where I can get some protection for my stop, and there isn't anything here. There isn't the 1 minute chart, but anything can happen. So if you want to trade this, you can do so. But you be there on the minute chart watching price as it pokes in there, and then you get out of the trade super quickly, and then that's scalping on a very high degree. And the cool thing is you can scalp, you know, it's super cool. You can scalp on the 1 minute chart, but notice that we have our directional bias from the big time frame, from the monthly chart. We know that we're selling on the minute chart based on our analysis on the monthly chart, the weekly chart, the daily chart, and so on and so forth. I think that's a really nice way to trade, even on the tiny time frames, because you know what's going on the big ones. Good. And so, I mean, this is a difficult one because, I mean, I'm not going to tell you to put your stop here because that's a little bit dangerous. You could put it above this little test higher, like so. And that might give you the necessary protection. And let's assume that we do that we simply do that. We need to find a place to put our target. And what do we have for targets? Well, currently we don't have anything. We have something here. Is this demand? No, it's not demand. Why? Because it's a reaction to demand. So this is a child, and the parent is over here somewhere. Let's have a look at it. It's yellow. Let's see if we can find our yellow line. Okay, had to pause the film and zoom back a bit. All right, here we have the test. This is the test. So we have a bit of supply here. Not a beauty. Test. It's gone. You can see it went out here. The origin of the move is obviously down here, but the area that did it is this one just down here. So I'm going to take this one and move it over here to this one. Move this over here so you can see it. This is where we had the test, and this is actually where the price came down to. All the way, I'm going to go zoom really quickly, all the way over here. So this is where price came to here. Okay, so the demand has been tested once back there on release and 2 times here. So if we go back again, and eventually we'll find it here. Okay, so we identified the area, and it's this one here. This is the bottom of the pin bar, the low of that pin bar, and this is a very obvious place for price to react. Why? Because this is price pulling back. What is price doing? It's seeking liquidity to do what? To move higher. So the area, the edge of the buy zone begins at the lows of the pullback. What does that mean? That tells us we have demand here. This is reaction. This is not demand. This is the child. This is the parent. So this is, you can see this because price has been moving sideways nicely. So this is price accumulating at a low. You can see we're at a very big swing low here. Price accumulates, and all of a sudden we have a pop up, and then price leaves, and price has left from here. The imbalance, the price imbalance, has its origin from here. So this is where you want to start to look to buy, just in here. Okay, so price moved up from here, price reacted here, and so this is what we're reacting on. So that little pin bar to the right is not demand. This is the demand. So you can start to buy from down here and up. So we're going to be selling at that micro supply that we saw at bleeding edge of price. This would be an obvious place to take profit. It's been tested once, twice, and if we go all the way back, like so, it's been once. You might consider to be out of the trade once price comes back down there. The only thing I don't like about this is that price has already been there, and then we're having a reaction. So perhaps price has found the liquidity required in order to drive price higher up into a better area of supply. This is a tiny one, so if you're going to be trading this one, be sure you're on the 1 minute chart to get yourself out of the trade in pretty short order, because it's going to be a quick one. We have this, which is kind of okay, not very interesting. Then we have this one, which is a little bit better. This is there's more volume in this here, which I prefer. So, I mean, for this one here, let's say we have sorry, there was a really big tropical fly just flew in here, so my little one having a nervous breakdown. Everything's just a little bit bigger in Bali. Good, so we have this, the stop's just up here, and the target just down here. But wait and see, be careful with this, maybe look a little bit deeper. Also, we have this downward sloping weekly trend line, so maybe find something that lines up, an area of supply that lines up with that nicely. Good. Well, I think I'll finish this up. Before I do so, I want to show you another tool that I forgot to talk about in the previous video. So I will put that on. This is one I use an awful lot. It's a very handy tool. Okay, assume that you want to do a multiple time frame analysis. So you have your weekly, daily, 4 hour, and 1 hour. And you want to ensure that you can see all of them at the same time. It's kind of a drag having to do, okay, this and this and this. So what I've done is I made a tool which you can download in the public portions of the website and the downloads there, and it is called a Pipnotic period changer. And it's a cool little tool because it enables you to do this. You drag the symbol onto the one chart where that indicator is attached, drop it, and it updates all of the other ones like that. So you can see price, you can make really good trading decisions because you can see weekly supply and demand, and you can get your entries on the 1 hour chart here, so you know that, wow, we should really be selling, and you can find your areas of demand to do so here as well. So it's just a really nice simple tool. The markets are closed, so it's a bit slow, and it's a really good way to help you just do your analysis a little bit faster. This is the way I like to do it. It's very, very quick and very useful. Good. I'll post this out very shortly. I hope the video was useful, and if you have any questions, please post them in the symposium chat room. Thanks very much for watching. Have a good weekend.